Welcome to this special edition of Leading Experts. I'm your host, Dan Ruzicka. Today you'll learn the inside secrets of business credit and funding from Chad and Trent Lee, founders of Corporate Credit Concept and authors of the Amazon #1 ranked business book, Unlimited Business Financing. Chad and Trent have worked with nearly 12,000 clients, helping them raise well in excess of $200 million in business credit. We have done all the research, and these guys are the real deal. If you or anyone you know has struggled to acquire the funding you need to push your business over to the next level, or over the top, or even open a new business, or just open another location, then stay tuned. You're about to get the answers you need to fuel your business plump with cash. They can help you do it with absolute certainty, and they guarantee it.
Welcome to this edition of Leading Experts. Leading Experts is informative and exciting. Leading Experts interviews authors, speakers, and entrepreneurs in all areas of business, so you become a much more informed consumer.
Welcome back. I'm Dan Ruzicka, and you're watching Leading Experts. I'm very pleased to have with me in studio Mr. Chad Lee, President and co-founder of Corporate Credit Concepts, and Trent Lee, co-founder and Chief Operating Officer of Corporate Credit Concepts. Together, they own and manage the nation's most credible and comprehensive corporate credit consulting business. Chad, Trent, welcome to the show.
Thanks, Dan.
Appreciate having you here. Chad, Trent, we've seen all the research that places you tops in your field, but in preparation for this interview, what I heard most is you guys do exactly, and in many cases, more than you say you're going to do. You teach some important concepts that are critical to any business, no matter what the size, no matter whether it's a startup or they're already in business. You call them the 7 universal challenges to acquiring business financing and funding. I want to cover each of those 7 topics today, each of those 7 points. The first challenge I want to talk to you is that far too many businesses spend too much money acquiring these financed, and you say they're almost forced to do so. Can you tell me more about that?
Sure, I'll handle that question. One of the first challenges that businesses face is when they need financing, they go and they turn to brokers. And when they turn to a broker, a lot of times these brokers are charging 8, 10, 12% of the amount of financing they obtain. So let's say a business needs $50,000. They can easily be paying in excess of $5,000 to get that $50,000 that they need for their business, whether it be a startup or expansion. And the challenge is, yes, they do get that money that they need, but they've now created a dependent relationship between the business and the broker, so that next time they need financing, where do they turn? They turn back to the broker, and they have to pay out another in excess $5,000 every time they need financing. And so it becomes a dependent relationship between the business and the broker, where the business is always tied to that broker in order to get more financing.
Yeah, I had some friends that actually been in that same situation. They paid an exorbitant amount of money to get going. Yeah, it was shocking. And again, he didn't know where else to go, didn't know about you guys. And so that's the situation he was in. One of the things I want to talk about in preparation for this interview, we talked to clients, we talked to some of your coaches. We did a lot of interviewing as far as that goes in pre-research for this program. And what I found most was that it sounds to me like the coaching is really the essential part of your program. Those weekly coaching calls, your clients have said, have made all the difference. Is that so?
It is, Dan. And years ago when we first started the business, we probably ran into the same thing that a lot of companies in our field ran into. Somebody signs up, pays the money, gets in the program, and some of those people don't do anything, and some of the people do. Other businesses, we found, like it when the people don't call you back. They've got your money. If we don't do anything, it doesn't matter. We realized that early on, and so we changed our compensation. Our coaches are paid, their salary is based on the contact of our clients. They get a warning at the 9-day mark if they haven't contacted a client, and their pay is based on if they have even one client that they haven't contacted during that pay period, they don't receive the bonus. And so it's tied into them contacting the client. We're pushing them. We can't force them to do it. We want to make sure it's the clients that doesn't go forward, and we're going to give them the opportunity that we can to go forward. It's also based on a customer survey. We send out a customer survey to each of our clients from time to time, and if they aren't performing, their compensation is tied to that. And so we found early on that if we aren't moving our clients along, they aren't happy in the program, we probably need to change coaches. And luckily we don't have that problem, but I think it's because we've got those things in place to keep from that happening.
Yeah, I want to cover two things because that really is a central part in your program. One is is that industry first, matching the compensation of the coach to actual produce and results?
I think in our industry it is. It's probably the only one. In other industries, we've taken it from that. We liked that idea and we thought it would work perfect for us. But in our industry, I don't know of anyone that does that.
Yeah, I mean,
in fact, it's the opposite. They would prefer no contact.
We've heard of coaching programs where some clients are left out in the cold for 2 or 3 months with not a phone call, nothing, after all this money's collected.
Very common.
And I got to tell you, in talking to your clients, that's one of the things they love. They felt as though that some of the coaches had more interest in gaining these finances than they did. They felt drive coming from the coaches, which made all the difference in the world. So
exactly right.
That was wonderful. The second challenge for business lending that you talk about is that most businesses don't know where to turn for lending. Can't they just go to their local bank to get a loan?
They can, but the problem with that, you walk into a bank and you don't have any kind of a relationship, and you're going to fall in the statistics that we see, and everybody's heard the statistics. 95% of all business loans are turned down. Anybody can walk into a bank, but the government has done studies, private sector has done studies, 95% of business loans are turned down. They try to offer you other options, things that we don't like real estate loans, second on your house, but you need to develop some sort of a relationship with a bank before they're going to really feel comfortable giving you money. And that's part of our program. We have people who we've been with for years that understand what our clients go through and where they are when they get through with the program, and they're more comfortable with those kinds of people.
It seems that it shortens the time frame that it takes to get this done. They're not kind of hunting all over. If you think about 95% of all business loans being turned down, that means that there's a huge amount of places they're going to go to that aren't going to be able to help them.
Right. We're taking sometimes a 5 and 6 year process down to 6 months.
Wow, that's tremendous. What if a business did just walk across the street and apply at the bank? What's likely to happen? What's the biggest downfall of them just showing up at their local bank?
So the biggest downfall, really, as my father mentioned, is one, the lack of relationship, and that's important. But there's some other downfalls that come to it. And it comes as no surprise, banks are in the business of analyzing risk, lending risk. So the banks obviously want to lend to those they feel are a safe risk. And if you walk into a bank with no relationship, with no business credit history, with no scores, with no ratings, you really have all things stacked against you. And the problem is you lack credibility from the bank's point of view. You're not necessarily a safe risk. And so what we do is we help build up that history. We help build up the file, the scores, the ratings. We introduce that relationship, and so now that business becomes credible. It becomes a safer risk for the bank. Not to mention that a lot of our coaches are past bank underwriters, so we know exactly what the banks are looking for, what they want to see, what they don't want to see, and we make sure to train the clients to make sure they meet underwriting criteria before they apply. So now that 95% of businesses being declined turns in reverse. 95% are being approved because we know exactly what they're looking for, and we help the business get in really compliance before they go and even apply.
So things are lined up beforehand. It's not necessarily that this bank doesn't want to loan you money, but you've got to have it presented as you show them how to present the package so it's going to get funded.
Banks want to loan money. That's how they make money, right?
Now that's shocking today. Is that still true?
That's still true. Banks are in the business to make money. However, they're not going to take risks to make that money. They're going to lend to safe businesses. Our goal is to make that business a safe risk.
Yeah, your clients say that banks are in business to loan money. That's what your clients all say.